Greetings all. We're now looking at Dow Jones, aka US30, and we are on the monthly chart, as you guys can see. And in regards to the monthly chart of US30, we had last spoken about how we have this overextended W structure over here. It is an overextended W structure because the first leg is lower than the second leg, as you guys can see. And we had also spoken about how price currently is at a very strong level of support, and you guys know by now that when it comes to W structures, ideally we want to see price breaking to the upside of that neckline and then coming back to that neckline to test it, and at that neckline is where we would look for potential buying opportunities, and that's exactly what happened in relation to US30, where we had this overextended W structure which had a neckline at that point. We saw price going upwards and then coming back to retest the neckline of the W structure, and at this point is where we should indeed be looking for potential buying opportunities, right? And that is because this is a very important area, in that it's an area where a lot of buyers came in because they were anticipating this W structure, as I've just spoken about, right? I'm just gonna add a line to that neckline of that W structure because it is very much important. Just bear with me while I do so, guys. Let's see. We could say that more or less this is the neckline of that W structure. I'm also going to utilize the Fibonacci retracement tool. We just want to have a look in terms of whether that neckline aligns with any key numbers that we have on the Fib tool. Let's have a look. There we go. We can see that the neckline doesn't really align with any key numbers. Nonetheless, that's fine. I'm just going to delete this Fib tool, and from here what I'm going to do is head down to the weekly chart. However, before I do so, let me just also point out that we had this candlestick over here. It is a bearish candlestick with a relatively small body and a long lower wick, and this tells us that at this level over here we have a lot of liquidity at that point, and that in the future we will see price come down to this level to grab that liquidity, and that is because liquidity represents money. However, having said all that, we don't know when this will occur. It might take a decade, it might take a couple of months, whatever, but nonetheless at some point the market needs to head down to this level to grab that liquidity, right? Another thing that I want to point out before we head down to the weekly chart is the fact that we had also had an overextended M formation at this point, which has a neckline at that point, and we saw price breaking to the bottom side of that neckline, heading back to the neckline to test it, as you guys can see, and we saw price push further down to this level over here, right? So it is quite possible that price from where it is may push further up to this level again, which is the neckline of that M structure, and at this level we might again potentially see price push further down, right? Anyway, let me head down to the weekly chart, and here we are on the weekly chart. What do we see on the weekly chart? What do we see on the weekly chart that's important that we should be paying attention to? On the weekly chart, we, as much as on the monthly chart I'd said that we had a huge M structure over here which had a neckline at that point, more or less. Can you guys see that on the weekly chart we had also had another M structure over here which had a neckline at that point? We saw price breaking to the bottom side of that neckline, coming back to test the neckline of that M structure. However, we see that the neckline of this M structure was not able to hold price, and we saw price pushing further up, making this entire M structure no longer relevant. However, let me just zoom in a bit. Having said that, as much as we had this M structure over here which is no longer relevant, can you guys also see that we have another smaller M structure over here, right? It's also an overextended M structure, and it has a neckline at that point. It's an overextended M structure because it too has the first leg being higher than the second leg, right? And we can see that price closed below the neckline and then went back to the neckline to test it, right, as you guys can see. So we might potentially be looking for selling opportunities at this point, right? And that is because, as I always say, guys, that when it comes to M structures, ideally we want to see price break to the bottom side of that neckline, head back to the neckline to test it, and at that neckline is where we would look for potential selling opportunities, right? So similarly, we might be looking for potential selling opportunities at this point, and that is because price is at a very strong level of resistance, which is also the neckline of this M structure that I've just spoken about. Anyway, let's proceed. I'm just gonna add a neckline to that structure, and just bear with me, guys, while I do so. Let's see. There goes the neckline of our M structure. The next thing that I'm going to do in regards to this particular pattern is to utilize the Fibonacci retracement tool. We just want to have a look in terms of whether that neckline aligns with any key numbers that we have on the Fibonacci retracement tool. And the reason why we do this is so we can gather evidence for why we should be selling at that point, right? And here we go. Can you guys see that the neckline of this overextended M structure, which is over here, aligns with the 61.8% Fibonacci retracement level, right? So that is confluence in as far as selling goes. However, we need further reasons for why we should be selling at that point, right? We need further reasons, and those reasons should be on the lower time frames. But so far, we have two reasons for why we should be selling, or three reasons rather. Number one, we have this M structure. Number two, we have price breaking to the bottom side of that neckline, heading back to the neckline to test it. And number three, we have the neckline aligning with the 61.8% Fibonacci retracement level, right? Anyway, as I said, we need further reasons for why we should be selling at that point. So what I'm going to do now is head down to the daily chart, and here we are on the daily chart, right? On the daily chart, the first thing that I'm going to do is to utilize my daily channel. Let's see, how would I add my daily channel in this regard? Let's have a look. Just bear with me, guys. Just bear with me. For now, I would add my daily channel in this manner. For now. Just bear with me, guys, while I fix my channel and make sure that it is pretty accurate. There we go. We could say that that's our daily channel for now. Let's proceed. Remember, guys, on the weekly chart, I spoke about how we have this overextended M structure, which has a neckline at that point. I'm just redrawing it so you can see clearly on the daily chart as well, even though we drew it on the weekly chart, right? So what else do we see, guys, in regards to the daily chart? Another thing that is also very much interesting in regards to the daily chart of US30 is the fact that we have another structure over here, and it is a W structure, which also has a neckline more or less at that point, making it very risky in regards to buying or selling at this point. Can you guys see that? Right, it makes it very risky because what may actually happen is, due to the fact that we have this M structure, price where it is may push further down, because as I said, we have confluence in as far as selling at this level goes, right? We have confluence. So having said that, guys, okay, in fact, before we continue, I just want to add a neckline for that W structure as well. And I just hope my lines are not too confusing, but I'm just doing all this just to make sure that we don't get confused or lost as we head down to the smaller time frames. So let's see. I can do this. I'll make it a different color as well, but just keep in the back of your mind that neckline is the neckline of this particular W structure that I spoke about, right? So what else do we see, guys, in relation, or rather in regards to the daily chart of US30? So guys, as much as we have this M structure, this W structure, which both have necklines in more or less the same areas, just also bear in mind that we have a channel at this point which has been broken to the upside, right? And as much as at this point in time our bias is to be looking for selling opportunities at this level, just also bear in mind that because the channel has been broken to the upside, what may potentially happen is price may continue to move further up. Alright, price may continue to move further up because, as I said, we have the W structure which has a neckline that has been broken to the upside, and we also have this channel which also has been broken to the upside. So it is also quite possible that as much as we're looking for selling opportunities at this point, price may continue to push further up. However, in order for us to buy, I believe that we should at least wait for price to close sufficiently over this level excuse me, and then wait for it to head back to the level again. And at this level is where I would buy if I was looking for possible buying opportunities. And my first take profit should be at this level over here, my next take profit should be this level over here, and my third take profit would be that level over here, right? Because they are strong levels of resistance, and not so much on the daily chart but more on the lower time frames such as the H4, the H1, and the other lower time frames, right? Having said all this, guys, at this point in time as things stand, even though the channel has been broken to the upside, my personal bias is to be looking for selling opportunities at this point. However, as I said, I need further confluence and I need further reasons for why I should be selling at that point. Anyway, let's proceed. So what I'm going to do now is head down to the H4 chart. Let's have a look. On the H4 chart, I'm just going to fix my channel. Let's see. There goes my H4 channel, more or less. Just bear with me, guys, while I make sure that it is pretty accurate. There we go, right? And here we are on the H4 chart. On the H4 chart, the first thing that I'm going to do is to add my H4 channel as well. Let's have a look. H4 channel. There we go. There goes my H4 channel. Let's see. I just want to make sure that it is very much in line. There we go, right? And we can see that in regards to the H4 chart, we are in an upward trajectory, right? And as I said, just bear in mind that price currently is at this level, which is the neckline of that huge M structure that I spoke about, and it's also a very strong level of resistance, as we've had multiple rejections at that point, as you guys can see, right? And as I've said, my bias is to be looking for potential selling opportunities, right? So what else do we see in regards to the H4 chart? Another thing that I see in regards to the H4 chart is that we have another W structure at this point, which has a neckline at that point, and the neckline has been broken to the upside, right? And I know that a lot of people actually bought on the second leg of this structure, placing their stop losses just below this level over here, right? Anyway, let's proceed. So what else do we see, guys? Another thing that I see is that we had this series of candlesticks going up, and in my humble opinion, it is as a result of the earnings season that is currently ongoing. Yeah, so we'll see how things unfold over the next couple of days, but right now as things stand, right, and as much as I've given you a breakdown of what I think may potentially happen, I don't see any buying or selling opportunities at this point in time. In order for me to be, as I said, at this level selling, I need further confluence, I need further reasons, right? But at this point in time as things stand, my bias is to look for a selling opportunity at that point, and that is because, as I said, on the daily chart we have that M structure as well as the neckline, or rather price retesting the neckline, and the neckline aligning with the 61.8% Fibonacci retracement level. So I need further confluence in this region before I sell. I need further reasons to be selling at this level. So that is it, guys, and as far as my analysis goes. I just hope that everything that I've explained makes sense. If it doesn't, just let me know in the comment section, and if I can, I will attempt to break it down even further. So thanks, guys, and peace out.